What's up, everyone? The market is still in a correction, but it presents a buying opportunity. So I will take this opportunity to continue making part 2 video on how to buy the dip and avoid catching the falling knife. In this video, I will share with you how to enter a buy and when to exit to lock in your profit. You probably want to watch all the way to the end of the video, so stick around. Swadee that's hello in Thai and welcome to Quantum Finance. Please help us reach a 10,000 subscriber goal by hitting the subscribe button below. Please do like, share, and hit the notification button for my future video contents. With that out of the way, let's get right into it. Last week on Friday, I made a video on trading NMDM, BNGO, NIO, and Tesla on the Hammer Candlestick pattern. Anyway, on Sunday, I posted on the Patreon page my top watch list of 10 to 20 stocks for the short-term momentum trade with the focus on trading on the Hammer Candlestick pattern. Note that in the Quantum Finance Patreon page, I list NMDM and BNGO to have 80 to 90% probability that it will go up, while NIO and Tesla have lower probability. This is a fact that EV segment is having a major correction at the moment, and that it will continue to be facing selling pressure. The overall tech and growth stocks on Nasdaq are under pressure. As of today, I believe Nasdaq has headed into an official market correction as it surpassed a 10% loss from its peak. In the watch list, I identified the support levels, entry points, resistance level, price targets, and probability percentage for each stock. Note that the probability percentage is the likelihood of something happening or being the case. How I calculate this is based on the stock's historical performance and trading patterns, but with more weight on the most recent closing data. My predictive model has about 80 to 85% chance of being correct, as it is very difficult to predict the future. If you want to access this list, you can join the Patreon by clicking the link below in the descriptions. And if you need a good brokerage account to trade, especially in the pre-markets and after hours, consider Webull. You can click on the link provided in the description below and open an account. When you deposit $100, Webull will give you 2 free stocks where each could be valued up to $1,900 each. Just last week, one of our viewers received Google stock valued $1,900 and another viewer received Facebook stock valued at $200. I do have to disclose that I will get 1 free stock as an affiliate, and no, I have not received either Google or Facebook stock yet. So in these trades, we're looking for a downtrend that have carved out a hammer candlestick pattern. We're looking for a potential reversal in the stock. Now from a statistics standpoint, the hammer candlestick has a high probability of 80 to 85% of being confirmed over reversal. So do note that I did not state 100%, but 80 to 85% is better than anything that is 50% or less. Okay, so this is how a hammer candlestick looks like. It has a small body with a long wick, which is about at least 2x longer than the body, or 2/3 of the overall candlestick length or height. The market psychology behind the hammer candlestick is that the bears were able to push the price down, but the bulls rejected it and pushed the price back to near the opening or higher. You can also watch my video on how to buy the dip and avoid catching the falling knife part 1 video by clicking on the link on the top right or in the descriptions below. As you can see from March 5th, BNGO price action, it opened at $7.40 and went as high as $7.41, but it then dipped to as low as $5.58. It had a V-shaped recovery and closed at $7.15. Here's the schematic of how the hammer candlestick pattern is formed, and here's the open and the high at $7.40 and $7.41 respectively. The bottom wick is a low point at $5.58, and the bottom of the body is a closing price at $7.15. So how do we set up for our day trade? This is my guideline on how to enter this hammer candlestick day trade. Remember, this is a guideline and not necessarily a rule. You can always modify it to fit your own trading style or strategy or objective, whatever works for you. The question I get asked a lot is, how do I know when and at what price to enter a trade? For me, I like to study a chart first and then plan out my trades the night before. First, I would identify and draw out the support levels and the resistance levels. Then there are 3 key areas that I would focus on. 1, my buy stop limit order price. 2, my stop loss price. 3, my exit price to lock in my profit. This one's a little more tricky as it will depend on your trading objective or greed. Yes, all my trades are pre-planned. This way, I have a general idea of what to do the following day. I can get into the trade if the market condition is right, or abandon trade if the market condition has changed from what I had anticipated. Think of it as a map or pre-planned route for a road trip to a beach. And would you still go to the beach if the next day is raining? Common sense, right? Okay, So for the entry point, I like to enter at yesterday's high point plus 10 cents to 25 cents. Let's use 10 cents for simple math. Yesterday's high was at $7.41 plus 10 cents gives you $7.51. By buying above yesterday's high point plus 10 cents, it increases my odds of saying that momentum of the stock has confirmed a reversal. Note that I'm taking a calculated risk that I'm assuming it will be in an uptrend. I like to wait and watch a market for 30 to 60 minutes right after the opening bell before I execute any of my trades. This way I can gauge a market, and if the market condition is right for my trade, meaning, hey, if it's sunny, let's go to the beach as planned. If it's raining, don't go. In this case, I set my buy stop limit order at $7.51. In doing so, my trade will only execute when it reaches $7.51. I'm trying to catch it on the way up. Next is when I should exit. If I want to swing trade or slingshot trade, meaning hold onto the stock for several days, then I set my stop loss at $5.58 less 10 cents or $5.48. Therefore, my potential loss is at $1.03. How I calculate this is by taking a $7.51 minus $5.48 equals $1.03. I normally would want to be making a minimum of 2x of what I could lose. In this case, my exit point could be at $7.51 plus 2 times $1.03, which gives me $9.54. This way, I'm risking $1.03 to make $2.06 per share that I trade. Of course, you can adjust this to any price or profit level you want. The other option is to utilize the price target from my predictive models, which our patrons get on a weekly basis. But in this case, since I'm doing day trading, I only want to get in and out within minutes or hours. In this case, I set my stop loss at $7. You can set it at any price you want. Why at $7? That is because I'm setting a very tight stop loss because the current market condition is in correction and I want to minimize my risk exposure. My exit point will be based on when the MACD lines cross to the bearish territory. What this means is that I'm glued to the screen and will execute my trade manually once the MACD lines cross. There is no guarantee how much I will make, but I will be making something as the objective is to day trade, to get in and to get out and not hold the stock overnight. By the way, I do have to disclose that I actually do own over 1,500 shares of BNGO for a long-term investment. In this scenario, my buy stop limit order kicked in at $7.52 for 500 shares. I watched the ticker on my screen using a 1-minute and 5-minute charts to help me make a decision. Sometimes I find the 1-minute chart is too sensitive and I may exit out of a trade too soon. So between the two charts, it will give me more time and smooth out the candlestick pattern out a little. Also, the RSI and MACD will be slightly smoothed out at the 5-minute chart. In this case, I exit at $8.55 or for a quick profit of $515. Note, there are many techniques and styles to day trading. This is just one of the many that I have used to have net me some nice profits. I think it is simple enough and more importantly, it's effective to make lots of moolah. Hopefully this technique of day trading can be profitable for you as it has been for me. I do plan to talk about other trading strategies and style in future videos. So make sure to hit the subscribe and notification button for future videos. Best of luck everyone. If you find the video of value, please like, share, and hit the subscribe button if you haven't already done so. Thank you, and let's go make some mullahs!